The stock market had a strong end to the week with Friday closing up 1.48% with a SPY at 566.76. The gamma exposure data has continued moving upward in its positive skew. We've seen bullish momentum ever since this low back on April 7th, and the market has just been roaring higher. We've been in positive gamma exposure territory for about the last week and a half, as we've been mentioning here on our YouTube channel. That basically puts us back into a buy the dip, sell the rip kind of environment. I will note that we are entering somewhat of a resistance point. This 565 to 570 zone has been a key level over the past year of resistance. I think if we can break through this zone, the next level that I'm going to be watching is at 575. This is actually our upper dealer cluster zone. I don't know if you can see it here on our chart. I'll just draw a line. That's the next level. It's only 10 points higher from here on the SPY. That would be our next target of resistance. A breakout beyond that, and we're looking at back to all-time highs, 600 and above. So the skew in the gamma exposure data that we track is suggesting that market participants are continuing to open up positions in the options market at higher and higher strikes. So what seemed unlikely just 2 weeks ago is now seeming more probable, with a potential move back to all-time highs at some point in 2025. We're going to continue to watch the gamma exposure data. As long as we remain in positive gamma exposure, we are going to continue to buy dips that the market offers us. If you've been watching our YouTube channel for any length of time, you know that we like to maintain a diversified hedged approach to our options portfolio. Currently, we do have some hedges on in the SPY, essentially giving us protection around the 525 level and below. I'm considering to roll those hedges up higher since we've had such a move over this past week, potentially adding another hedge using the 540 puts on the SPY. So currently we are using SPY put debit spreads as our hedge. That does help to reduce our costs just a little bit by using those put debit spreads, and gives us general market protection to the downside. So we have a number of long positions that we are collecting profits on as the market goes higher, and then we're adding fairly inexpensive put debit spreads to protect our downside in case we see any kind of sharp rejection. That rejection has not come yet, so we've been able to capture quite a bit of profits on the upside with our bullish positions. By the way, if you want to follow along and see all the moves we're making in our options portfolio, as well as learn the strategies that we employ, I'll put a link down in the description below. You guys can check that out when you have a second. One of the things we've been mentioning in our daily live stream this past week is the volatility index closing these big gaps from when volatility first spiked in early April. Just last week, we came down, breaking several important levels. One is this 50-day EMA sitting at 25.89. We broke below that. We also broke into negative gamma exposure on the volatility index options chain. Those two are very significant levels, and now we're seeing growth at the 20 strike and below on the VIX. You can see just in Friday's trading session, nearly 50,000 contracts trading at that 20 strike. So although market participants are maintaining some protection to the upside at this 42.5 and this 50 strike that we can see here in the gamma exposure data, we've also seen significant growth at these downside strikes, and that's where the volatility market has been trending over the last several weeks. Next, let's take a look at a few names that we are actively trading and that are on our watch list. We'll start with Tesla. Tesla had a really nice up day of 2.38% on Friday, closing at 287.21. This is another name that we've been discussing in our live stream, which, by the way, is at 10:30 a.m. Eastern each trading session. You guys can join. I'll put a link in the description below if you're interested in checking that out. But the last week of April, Tesla has seen a really big ramp. It's been consolidating over the last few trading sessions. I want to highlight we've been watching this big gamma exposure concentrated at the 300 strike, and we've actually started selling puts as a part of a wheel strategy in one of our geek portfolios. So far, that position is working out quite nicely. Our 50-period EMA is at 277.63, so we're well above that, consolidating above that level in positive gamma exposure. You can see our zero gamma exposure is also right at 275. So we're consolidating above those major support levels with gamma exposure at the 300 strike. We think that the probabilities are likely that we can see another leg higher in the next week or two up to that 300 strike. Next, let's take a look at Meta. Meta up 4.34%, closing at 597.02. We've been highlighting the big gamma exposure at the 600 strike. We actually played this in our smaller $10,000 portfolio. We entered a position on April 25th. This was actually the May 16th 580 600 call debit spread. The main premise for this idea was a double bottom that we saw earlier in April, as well as large gamma exposure growing at this 600 strike. Volume continued to come in, and so we wanted upside exposure to that potential move. Fast forwarding to this past Friday, May 2nd, we locked in $700 profits on our 580 600 call debit spread. It hit the 600 strike. Really nice move off of that double bottom, and you can see just how large this gamma exposure at the 600 strike grew since the last couple of weeks. Now looking forward into the future, a lot of the traders in our community are eyeing this 700 strike. We see gamma exposure starting to grow at the 700 strike. We are above several major support levels, including the 50-day EMA at 574 and the zero gamma exposure level sitting just above the 550. So I think there could be a little bit of consolidation around this 600 strike, maybe even a little bit of a pullback, but I think that would eventually get bought by market participants for the potential move up to this 700 strike. We did hit this level back earlier in February, and I think in general, if bullish momentum comes back into the market, this 700 strike could be a target once again. Next, let's take a look at Nvidia. Nvidia closing Friday at 114.50. Currently, the largest gamma exposure is at the 120 strike. That's our upper dealer cluster zone, and you can see just naturally looking over at the price action, this has been an area of support and resistance going back to the middle of 2024. Nvidia is another name that we just closed out a position on. We entered on April 22nd. We actually bought the May 16th 105 115 call debit spreads. We noticed a bunch of negative gamma exposure sitting at the 100 strike and below, and our thesis was that most of these put buyers would be closing out their positions on any kind of bounce attempt from this level, and that's exactly what we saw happen. All those puts being closed out actually just added more fuel to the fire and the upside momentum that we saw. We were able to lock in around $840 on our small $10,000 portfolio on the call debit spread that we had, and we locked that in here just this past Thursday on May 1st. So now coming back to our chart and just zooming in here, I just want to take a look at what my plan is going forward. Ideally, I'd like to see some sort of consolidation between the 110 and 115 strike over the next week or so before we see another leg higher. I'd like to get in potentially buying the 115 120 call debit spread, and I'd be looking for something either in the May 16th expiration or the May 30th expiration. So it kind of depends how long this consolidation takes to play out, but either May 16th or May 30th. I think that has a fairly decent risk reward probability. This would actually fit pretty well in the context of our overall portfolio, which is one of the keys for our decision making for what to add and what to remove in our overall portfolio. By the way, if you're interested in following along as we manage our options portfolio in real time, as well as learn our strategy approach, you can head on over to geeksoffinance.com. You can sign up and become a member. Members get access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our community Discord. Our community Discord is a vibrant community full of traders who are sharing trade ideas and setups every single trading session. You definitely don't want to miss that. Link in the description below. And don't forget, you can also sign up for our daily live stream, 10:30 a.m. Eastern. It is archived. I'll put a link in the description below. You can join directly through YouTube. Thanks so much, everybody, for watching, and we'll see you guys in the next video.